All right, we're live now. Thank you so much for your patience. I know a lot of you probably had to go on to another stream. I totally understand. I was having audio issues. Please let me know in the chat. But on my end, and if you see the waveform on the bottom right, it looks like it's picking up my audio much better, but just let me know if that's still an issue. Now, as you guys join here, I just talked earlier about what we're going to cover. So before earnings are out, I'm just going to keep refreshing this kind of stuff. But essentially, it's after market close, and we know that's when... Oops. That's my phone. But yeah, as Palantir is going to get their earnings out, the call is going to be at 5 Eastern time or 4 Central time. So as you can see in the bottom right here, market is closing in about a minute. But essentially, the release out the information a few before. Sometimes they're a little slow. Sometimes they're a little fast. So we don't have an exact time. And, I'm sure a bunch of people are going to be going on the website and just trying to make sure that they can... get the information as soon as possible. And I'm glad to see. Thank you all for letting me know. It sounds and looks good now. Thank you. I really appreciate it, guys. I know I don't live stream too often, but for these kind of events and days, it's kind of like the Super Bowl. Well, 4 times a year, but it's like the Super Bowl. So, but yeah, let's just cover some stuff before we have new information available. Like I said earlier, a lot of at least in my opinion, right? And I did a video today too. On Dan Ives. It was very short, quick to the point, and not necessarily new information. But for Dan Ives, a lot of it rests on, are we seeing growth, right? And are we seeing customer counts grow? And we know where specifically they're trying to do it, right? U.S. commercial, that's basically what they've been touting. And yeah, once in a while, we'll see an international commercial deal. It's nice, or a government deal. And I'll talk about that a little bit later. But really, the bread and butter right now, and I don't care honestly if like other segments are lagging. If we're seeing outsized performance from US commercial, I think that's really going to make a lot of people happy, right? The market happy. And even if you don't care necessarily for the stock price, if you're a very, very long-term holder, and just knowing that the business is growing and the way that management has been touting aligns with that, I think that's really what matters here, right? We're trying to see the gap close between what management says, and we hear this from the earnings calls, we hear this from whenever they do any speaking events, AIP Con, or just anything, not necessarily just Alex Karp himself, but other management. We want to see that continue to converge where we're saying, oh, it's growing fast, customer count is growing fast too. And then eventually, if it doesn't coincide at the same time, revenue. And that's actually the other part I wanted to talk about, revenue. And the first thing that came to my mind when I saw the guidance actually from last quarter, let's just do that. I know we always want to get as close as possible, 30% over the long term. But when I saw these numbers for the first quarter guidance, and this is typically a slower season for them, if you compare this to Q1 2023, this is around a 16.5% or 16 to 17% growth rate. So that's much lower than 20%. So at least I think what I would want to see is a beat here, of course. I know that Palantir likes to sandbag or at least keep themselves aligned to more realistic numbers, and they haven't necessarily disappointed to the own guidance that they provided. And so I'm just hoping, at least when earnings come out, we can see something a bit higher here and getting closer again to 20%, because that was the big story when these earnings came out for Q4 2023, is that they hit 20% for that growth rate there. So I think that's a really important story too, that may or may not play a role depending on what guidance they give for this upcoming earnings. Because if we're returning to higher growth, say for second quarter 2024, then I think a lot of people will be more forgiving in that aspect. So, but yeah, just let me know in the chat, guys, if you think that Palantir is gonna beat on the numbers they provide, or they're just gonna fall in line. I know sometimes they've gone a bit higher there, but either way, we'll see. I think a lot of people are still gonna look at the customer count, like I've said, and throughout the quarter we've been seeing lots of news articles. So we don't have official numbers, but people keep talking up AIP boot camps and how it's becoming an important tool or event or whatever marketing strategy that Palantir needs. Because if you think about artificial intelligence, right, it's a new-ish industry, right, or at least being applicable in a business sense. And what AIP boot camps is, it's a sales tactic, of course. So they want to get exposure to the customers of their products and how they can use AI. But the thing is, it has to be educational too, because it's a brand new thing. So I just think of like when email was like new. I forgot if it was like the late 80s or early 90s. I'm obviously not that old, but it's the same thing, getting used to using a computer when those first came out. I remember hearing stories from teachers about they take up a whole room, and I've seen pictures, and then they've gotten smaller and smaller. Like I grew up with that, and the literacy of computers is natural. But then if you're already a full-grown adult and you've been working with paper and pen for so long in typewriters, that does make a difference here. And there's it's kind of like that, but for artificial intelligence. And even if you're not a tech worker today, then it might even be a larger gap to fill. So this Bloomberg article that came out, Palantir's secret weapon. So we recently got some information that pointed to an acceleration of this, and I think it's a good indicator, right? So they even did a comparison here. I believe they said 500 late last year, and that's actually because they just started doing boot camps, right? And they were ramping it up. So they did a little bit more of existing customers. And then with the existing customers, they were able to get people who can actually run boot camps. And this one was actually in Pontiac, Michigan that the Bloomberg journalist visited. And it was being ran by a Komatsu person, or at least they were one of the people. I'm sure there were some forward deployed engineers from Palantir there helping, especially with 100 people, right? But the big thing here is that you're having a whole education around this. And, if you're the first one to teach people about artificial intelligence, or you're making it you're the first one to bring an interface to it for these folks at an enterprise, like artificial intelligence can definitely run in the back end, right? And you're going to automate processes, and maybe the user never really has to interact with it, but maybe it's a first mover advantage here for Palantir. And like they've been doing right now with boot camps, trying to get people on board, it's the first time that they're getting the chance to work with it, and they've scaled this up. So when I first heard about boot camps last year, let's just say, they're running a class. How scalable is that? How many FDEs are required? Is it like a one-on-one situation? But it seems like they're able to get these pretty big because it's 100 people, right, in one gathering. And of course, there'll probably be multiple representatives from certain customers or prospective clients. But for sure, there might be at least 20, right? If you have 5 people, that's probably excessive, honestly. But you can have a good amount of representation, and you can leverage that with the amount of people. So it's not a one-to-one kind of thing, which was what I was afraid of when we first heard about AIP boot camps. But it didn't take too long, honestly, to figure out that, they were definitely going to be able to scale this up. And the other turning point that I mentioned with being able to have the customer themselves, the Komatsu representative, be the one to actually run these, or at least walk through other customers. Because if you think about it, it's probably similar to your own work where you're so used to the kind of work you've done, and getting an outside consultant, it takes time to ramp that up. And someone who may be able to work with a Komatsu person, let's see, what was their positioning here? Sorry. Mining program manager. So you may have someone of similar background and similar kind of issues that they're working with. And so that helps a lot more than just, say, an FDE who's very good and I guess able to teach Palantir's products very well and know it inside out. But getting the other part of the equation is how you're going to actually apply it. And that's when the customer comes in. And I think this actually makes a lot of sense, being able to at least have a diverse kind of range of teachers, not only Palantir, because they're obviously the ones who run the products, but also the ones who are using the products themselves. And this is not new, of course, from Palantir. We go to their channel, right? You're going to see a bunch of, you're going to have AIP Con, which was the first iteration of the strategy. And it kind of worked out, right? Because now you're at least able to showcase and have everyone see what they're doing. But, in reality, and for myself too at work, when I have a consultant, we've had one recently for Power BI, we use Microsoft Fabric, and it's nice to have that kind of ability to interact and go back and forth, not necessarily a presentation. So that's why they eventually moved on to the AIP boot camps. And I think, with all the things that are coming out, I mean, this was cherry on gravy on top, essentially, with getting an inside look here from Bloomberg. But I think what speaks louder is going to be the numbers. And last time, of course, they gave out what they had, at least officially, near the end of the year. So I wouldn't be surprised if these are completely blown out of the water. Let's see. So slow. Here we go. Yeah, and I remember this too, 0 to use case in 5 days. We're hearing about it in just like one work day, 8 hours that they're able to get a use case. But over here, this was released back in February. of this year, and this is for end of year 2023. So we have 465 plus organizations participating in boot camps here, and from the sounds of it, from the Bloomberg article, we had 5 per day. Now, people are going to care more about, I guess, the end result. Customers are actually people customers are organizations that are actually giving money, and they're having revenue counted, because that's actually in the little footnotes there that you're able to recognize revenue from them. So just because the high top number is here, we kind of want to see, or at least get hints at. I'm sure they won't give exact percentages on what's needed, but let's see here. I'm just refreshing this, but just knowing that boot camps are running, we want to know how many are actually turning into customers. And we know that there are going to be repeat people at these events, as well as existing customers who've had expanded. So that's all I want to talk, at least for the U.S. commercial side. I think customer count is going to be very big. Now, people are going to be curious too about Titan and government revenue. So if we actually reference back here, so early in March, this was long awaited. Is Palantir going to beat RTX or Raytheon? $178 million. People were like, oh, I thought this was like multi-billion-dollar deals, right? Well, the big thing to note here is that this is phases, right? And it's the Army, and we kind of just have to deal with the way they want to run, giving out their business in this case. So we learned that they won phase 3, and that's good. That means now they're the sole winner, essentially, or their team is. So we know that this is the prototype phase now. They're building 10 vehicles, and it's going to be 5 kind of basic ones, and then 5 with more advanced features, but they're kind of experimenting with them. And then this can lead to multi-hundred orders, but that will be over a longer period. So a lot of folks are curious about how much money are they getting from this, right? I know conceptually it doesn't seem like a lot, actually, 178, and we know this phase will definitely go on at least a year or even longer. And I think what's more important right now is the symbolism to it. They're basically the winner of the contract at this point. Now they're competing against themselves. Can they actually deliver on what the Army needs, right, for their specs? And I think what's more important, I believe, let's see, we have 24-month period of performance. Yeah, 5 basic and 5 advanced. I think this is kind of going to set the baseline, right? What are they going to build off of? And then the advance is going to be, well, let's see what kind of other kind of, I just got a tweet notice. Sorry for the interruption there. I think I got something from Palantir. Let's do this. Oh, why is this not logged in? Yes, and I do actually have an X account here, just so if people are curious. I just got a notification that Palantir posted something. Very cool. All right, there we go. Finally. So we got the numbers. We have 634. This is the top line, so that's nice that they want to tout it here. So 634, the high end of guidance was actually 625, and they surpassed that upper end, as they mentioned here. So let's just walk through the full results. 4 o'clock is the time that we want to keep our eyes peeled for the call, essentially. And we'll walk through that. I'm not going to interrupt it. I'll let it play through, and we'll talk about it after. So this is good. And then they earned $106 million in profit. So I don't know if that's GAAP or not. If it's GAAP, that'd be pretty big. So let's see. This is from Business Wire. So this is not the one on their website, but let's just look at it now. Yeah, so it's nice when they put in the title, because this is what they want to tout. Year-over-year growth, 6 consecutive quarter of GAAP profitability. Not surprised there. It is only 4 cents. I know the street was looking for 8 cents for their profitability on a GAAP basis. For me, I don't care, honestly. I just want to make sure that they can keep the GAAP profitability and then ensure that they have their S&P eligibility when that happens. We don't know if it's the next time or if it's even later on. But let's take a look at everything and see how... Actually, I know a lot of you guys are also curious about the price. Let me just flip to that really quick. Oh, after hours here, 23. It looks like we do not like these numbers here. So Well, if you think about it, we kind of flew up today, so we're kind of back to where we started. If you look at the price action here, but let's digest this information. I mean, if you're a longer term holder, we could see this as an opportunity. Obviously, if you're a trader, I guess we'll see how that turns out for you. And I guess for some disclosure, I did have cash secured puts that I closed out, so I guess it was kind of nice that I did so. But we don't know if this will be a sustained movement and how much further it will or can go. So wow, look at that deep red candle here. This is an hourly one, just so you guys know who might look at it on a different level there, like a minute. So let's just look at the results. So we got 81 million GAAP income from operations. I just did a video on this, 62.8 I believe, or 65.8. So they're still expanding this. This is nice. GAAP earnings, 4 cents. Adjusted EPS of 8 cents. So maybe this was what the street was expecting for adjusted EPS. But regardless, they hit the GAAP income from operations, which to me is the true scorecard. Revenue grew 21% year over year, above the 20%. Thank you. And 4% quarter over quarter, 634. Commercial highlights. Now, I think this is where we care about the customer count. Let's see. Revenue specifically is 40%. 14% quarter over quarter to $150 million. U.S. commercial count grew 69% year over year, 90% to 262 customers. Okay, so that's good still. I think, let me just take a look at the chart here. 262, 19%. Where did I have that? Yeah, so it went down a little bit here for the growth rate. Oh, this is commercial, not U.S. commercial. Let me double check this. I'm gonna have to get the numbers from a separate spot. Okay, U.S. commercial count. Oh yeah, it was 55%. I remember this was a big number. 226. Wait a second here. U.S. commercial count of 221. U.S. commercial 262. Okay, so 262. Okay, there we go. So that's the 19% quarter over quarter. So we have an acceleration, at least on. So it's still doing well, essentially from like consecutive quarters. 19% is definitely an outperformance of what we were seeing previously. So there's definitely a bump here being recognized for that. Now, let's just keep going on the new results. I know I keep going back and forth, but I like having the context there for you guys. Now, actually, I just noted there's 192 of you guys in the chat. Thank you all for stopping by. I'm Zach at Palantir Research. I just want to put my blurb there really quick who are new, but everyone knows I probably just do the really short, quick videos on Palantir. I just like to get to the point, but we're live streaming today. So we got the awesome results, right, to finally come out. Commercial revenue grew 27%. Government revenue, 16% year over year, 3% quarter over quarter. U.S. government grew 12%. So we have a little bump here because it was little going downwards per se for government. So we don't need to see outsized growth here when it comes to government and U.S. government. Of course, over the longer term, we would like to see that. Now, customer count grew 42% year over year. Now, this is the consolidation of that. Now, rule of 40, score 57%. Cash from operations, 130. There we go. So let's look at what they provided here. We got the revenue comparison. So 634, income from operations. That's everything. Now, I think a lot of people are curious about expectations. So revenue of between 649 and 653. This is for Q2 2024. For a full year, they are raising guidance 2.677 to 2.689. Let me just reference the numbers here. Oh, guidance. I know I'm just jumping around on these slides, but it's the easiest way for me to. Oh, is it under Outlook? Here we go. Yeah, so full year was 2.652, 2.668. Okay. Let me get a calculator out just so I can look at the change there. Let's just do top end. 2.668, 2.689. Okay, so 68 versus minus 89. I don't feel like doing mental math right now. Okay, that's 21 million higher on the higher ends. Okay, so just so you guys know, they raised guidance. This is what I wanted to look out for. We know that the street right now does not like what they see. Oh, actually, it's recovered a bit. We were down 7 or 8% at one point that I saw. Let me see if I can see the candles information. Okay, yeah, we were down like 7 or 8% really quickly here, but it looks like we're digesting the news a bit more because from what I'm seeing, we hit the quarterly revenue at least higher, and then we have the guidance that was adjusted upwards, which is nice. So like I said in the video that I covered this, actually, guidance when it's above, when they're, so sorry, I'm just jumbling my words, but the guidance we got originally was a 20% year-over-year growth from 2023. So looks like we're slightly getting higher there. I think believe this is like 21-ish%, maybe like a decimal point there. But we're slowly revising it upwards, which is nice. Now, they're raising U.S. commercial revenue guidance as well. This makes sense. So it looks like they're actually seeing much faster growth than that they're expecting, or at least from when they gave the original guidance. And yep, and then we're going to continue to see free adjusted cash flow, $800 to $1 billion. Looks like that's going to be for the year. So an extra $1 billion added to their balance sheet is always going to be nice. Let's get down to the numbers here. Gross margin, yeah, actually, so they didn't really raise their cost of revenue much for how much they've risen their revenue, which is nice. So their gross margin is really nice considering the velocity, right, of, say, top line versus how much it's costing them to acquire customers. So they're truly scaling, honestly, and I think it's important that people understand this, right? When you see another business, let's say that you produce chocolate, there's going to be an associated cost of chocolate no matter what. The more you sell, the more you're going to have to purchase those materials, and that's cost of goods sold. For software, it's a little bit trickier, especially in the accounting and how they actually allocate it. But regardless, what do you want to see for a software company? You're getting a lot more revenue and you don't have to, it doesn't cost as much, right? And it makes sense. You build out your amazing product and then you have other people just keep on using it and buying it. And you're not necessarily having to put physical material into scaling that up. Now, operational expenses, I wanted to see also the change. Let's see. Yeah, sales and marketing, they actually didn't raise too much. Research and development, 20 from there. And they actually flattened or slightly decreased their G&A expense. So they're actually a lean machine here when it comes to operating as a company. Now, total expenses, yeah, it's only gone up like 20-something million. And income from operations is much larger here. So I like these numbers. I wonder what the balance sheet looks like. Cash is... let's see. The marketable securities, accounts receivable. Let's just see the total assets then. So yeah, total assets has gone up. Even if customers do owe them, this is a good sign if your accounts receivable goes up. What you care about is the aging of them. Obviously, you don't want to keep counting debts that are owed to you that probably won't get paid back. But with a company that's growing and scaling, you do want to see growing accounts receivable because, in all practicality, right, the more customers you get, the more that people are going to have invoices for them to pay out. And they have increased their marketable securities. This is probably the treasury. So that's another $500-ish million that you can get a return on from the Fed. Very nice. Their cash, technically, that's sitting in cash, has gone down. But regardless, this is pretty much the same. If you look here, it's gone down maybe 310 million. This has gone up, though, about 500 million. And this has gone up as well, 150 million. So prepaid is not a big deal. Let's just look at the debt really quick, just see if anything funny is here. Accounts payable, that's fine. The more business you're doing, right, you have to pay your bills. Accrued liabilities, nothing new. Okay, they've kept their liabilities flat, right? No surprise debts showing up. Deferred revenue. This is always interesting to see how this changes. Okay, that's not customer deposits. Okay, everything is pretty flat here. So I think, at least for me, so as a longer term shareholder, I don't necessarily care what's happening on the day to day. And it's not necessarily a giant change. So we're down 7% again. So it looks like we're fluctuating. Maybe on a technical basis, this could be more important. But long-term wise, I like what I see overall. I'm seeing a growth in customer counts, and I'm seeing it in the places that I want to. especially in U.S. commercial, like mentioned. I'm going to be curious, though, to see what management has to say about, I guess, the boot camps in general, AIP Now as well, which is kind of their new initiative. Let me see if I can bring it up. Yeah, AIP Now will be interesting what they talk about it because it's so new, right? They showed it off at AIPCon, the latest one. And then we're getting a lot of demo videos coming from, Chad is one of them, so it's a fan favorite there. But we're also getting a couple other architects that are showing off the features and use cases that are being showcased on AIP Now. And this can be the next iteration, or at least supplementary to AIP bootcamps, because you have someone to hold your hand a little bit, or you have a more intimate presentation to figure out what to do with AIP and for your own business. But with AIP Now, it sounds like someone in a similar industry or even the same position as you has came up with ways that it's been useful for them, right? And if you're the same industry, you probably face the same issues. Maybe there's going to be little things to tweak there, right, for your own specific company. But it's important to note that this can be another way to help speed up. Now, I'm not saying this is hyperscale mode per se. We have to see if that can even get to that point. But the faster and faster a customer can see in their own line of work how they can use Palantir, that's one less barrier to figure out, should we sign with them or not, right? If that becomes a non-issue, let's just say, then that's just one less question that they figure out. They know the value it can bring. It might just come down to, is it worth it? We know Palantir is a premium product. Now, I'm just flipping back and forth here. I just want to make sure I don't miss anything. I don't know why I reset the YouTube channel, but Palantir usually has its information up. Actually, let me double check the quarterly results page as well. Q1-2024. Got the presentation. So this is probably much easier than to look at the articles there. But yeah, when you guys have a chance, I always say you should look at the stuff yourself, just to make sure it checks out with you. Investing is definitely, so this is not investing advice, of course. I like to cover the news mostly. But yeah, it pertains to your life and things. So your allocation might be appropriate for someone else, but not necessarily. Even if they're in the exact same boat as you, you might have totally different life goals, right? Now, that's my splurge there on the personal finance end. So we got the Q1 highlights. What I did want to point out is that they put this at the very top. So it's nice. When they're putting something at the top, it usually means they want to show it off. And when it's revenue, that's kind of a nice, refreshing change versus, something else like customer count, which is it's always great to see. But when it's revenue, I know a lot of people like the front line. All right, let's see. All right, so I'm not going to go through every single detail here, but essentially they're going to talk about what's happening around the world. Nothing new here. Okay, and I do have to apologize. I follow the news basically daily, and I make videos on it daily, so none of this is really new. And whoever was here earlier when I started the stream, you guys see some very familiar things, right? I didn't really talk about the politics here, but essentially more geopolitical instability. I guess you could say domestic as well as global. And the way that works out for Palantir, we'll still have to see, right? If it's government contracting internationally, NATO, that's one thing to check out for sure. And that's why the Ukraine stuff is always brought up here. And yeah, I understand everyone's going to be on different sides of these issues, but what Ukraine has actually turned out to be has been a training ground for Palantir and building up their products. On the military side, of course, considering large conflicts, that they're able to do this is an opportunity, honestly. And I'm not trying to make light of all the horrible things of war, but Palantir has had an opportunity to work with military leadership here as well as their government leadership, and we know about the reconstruction aspect as well. Now, that might be a little bit later down the line, but it's important to note they're having the chance to build it out and get real feedback from other governments that may be dealing with similar issues, and of course, allied countries more likely, not the other side of the team. And we talked about this briefly as well. U.S. Army getting the phase 3. Oh, I'm seeing negative 10% in the chat. Let me just bring up the Weeble. All right, looks like with more digestion, people just don't like the numbers here. And you just need to remember as well, the numbers are in relation to the valuation of the company. Now, just because a company was trading at a certain ratio, it doesn't necessarily mean the ratio has to hold if people want to let's say they want to come in at a lower ratio, right? It's because they see more risk. If you're willing to pay a higher ratio, and I'm talking about price to sales or price to earnings, whatever metric you want to use, for a company like Palantir, price to sales is probably the easiest thing to come up with, considering price to earnings will go up pretty fast once they start to scale up the top line. But and for other things too, people look at the cash flow as well. So what are you willing to pay for that, right? And right now, if it's 20, what are we at here after hours? 22.86, so almost $23. I believe that's like a 46-ish, $47 billion market cap. If you think it's worth it for a $3-ish billion in revenue, or $2.8 billion in revenue for 2024, that's what you have to be willing to swallow. And everyone's going to have their own opinion on that too. Now, Palantir and the VA, I remember this too. We talked about this. They had an article out, 90 million savings. They took it away, and then it came back like a month later, so it was pretty funny. Just because it seemed like, I don't know, it just seemed like someone might have gotten butthurt from that. So I'm just going to leave it at that. Palantir and Oracle, this was much more recent, but another partnership, major tech company, of course. People like to think of this similar to the work that they also do with, Google Cloud. I believe they have a Google Cloud as well as AWS and Azure. So if you're getting all the major cloud providers and they're in some form of way allowing you to run your stuff on that and getting exposure to more customers, always a great thing. I believe this one's a bit more intimate though, and yeah, I believe. Yeah, here we go. Governments around the world. This one's more focused on that. But even for the commercial aspect, Palantir and Oracle, they've been cloud agnostic, just because of the way they layer their technology. It's layered on a different level than, say, it's running on having to run off the cloud there. So AIP boot camps, deploying full spectrum AI in days. Now this one doesn't have any specifics. 915, cool. We've completed 915. Oh, actually, 915 since mid-2023. And I believe this is until March 31st. I'm assuming they're cutting off the data. So if we looked at the last one, Q4, they focus on 465. 465 organizations participated in boot camps. Let me just see the wording. 915 organizations. Okay, so actually, I believe this is for the full year of 2023. Okay, so I know that it started before the last quarter, so we'll see how this scales up then, because 465 minus 915, slightly less than half, or just basically around half, so around 400 something. But it doesn't necessarily mean the more boot camps, the more organizations boot camps, the better. If they're able to close at a higher quality of the boot camps being ran, then I'm all for it though, right? So if they had to change things around, right, it's not necessarily a mass of like, just come in the funnel and then you're going to sign with us automatically. If they're finding a way that's more helpful to customers and valuable, I think that's going to be better. But we'll hear what management's comments are, right, when the call comes out. And I keep flipping back and forth here on the live because I believe they put it on YouTube. But I'll go to the link later. So we're at 330. Okay, financials here. 40% year over year, 14% U.S. commercial. U.S. commercial. Yeah, they're still touting U.S. commercial and all these metrics. Yeah, the big one, of course, is going to be the customer count. And this should grow fast right now. This should be following later on with the revenue, as long as they're able to expand with these customers. We don't necessarily know the nature of each and every single deal, but I'm going to look for the slide that has the number of deals. That's always great. So GAAP net income, here we go. Still going up, still positive, still S&P eligible. And that'll be interesting once we actually get some more information. That's probably the next biggest catalyst, honestly, unless we get some deal that we haven't heard in a while. But the next biggest catalyst probably will be S&P inclusion. So, and it's not guaranteed, right? I showed that calendar a while back. The next inclusion date will be around June. I forgot the exact day, but it usually happens at the beginning of the month. And then when it actually takes place, then it happens in the middle. And then the next one, if they don't hit that should be September, I believe. 3 months, July, August, September. Oh, no, October then, to hear that. So we'll see. GAAP operating income, they are still growing this out. And from that last video, I said this is what I like to see. We're going to make sure that they can make money as a business for real. Just remember, there is SBC happening as well, but on a GAAP basis, they do value that in here. So even with the SBC offsetting the cash need for it, and we're still counting those dollars and expenses, they're able to make money running their business. And actually, quick rant here, some other tech companies, at least when they start out or just become relatively public, they still have to figure this out, right? You can be you can manipulate the GAAP net income a little bit, but for operating income, you just want to make sure everything is streamlined, the expenses and then the top line there. So rule of 40 here. For some reason, this is a new metric here. So rule of 40, this is a software metric. 40% generating profit that's sustainable. So let me see. I have to learn more about this metric, honestly. But let me see. What does this say here? It's so small. If someone in the chat can let me know rule of 40, what it means. Oh, so it refers to the sum of our revenue growth rate year over year. So the revenue growth rate of year over year, and then adjusted operating. Oh, is this a typo? Well, and I don't need to say this. Sorry. And our adjusted operating margin for each of the periods presented. So it refers to the sum of the revenue growth, 57%, and operating margin. Oh, okay, so they're adding two percentages together and getting this. Well, either way, it's going up. If they're taking the margin, that means how much they're keeping, right, after expenses. And this is in the upward trajectory, and it's above 40%, which I believe is the standard that they're saying. So. Okay, so that's good. Another metric that's going upwards. Now, these are delicious when I see these kind of graphs, and I don't know why I use the word delicious, but commercial revenue growth, 27%. U.S. commercial revenue growth, 40%. So we know international commercial is not necessarily pulling its weight, but we're getting a lot of help here on the United States side. So, and that's probably why they only have this graph here for U.S., and we'll just have to assume from the international side. I mean, you could calculate this out when you have a chance. Now, government. So this is the interesting part. So government revenue growth, so the U.S. is actually 12%, and then government revenue growth overall is 16%. So on a percentage basis, you know, that's pretty interesting on the international side then. And if we go to the graph here from last quarter, just because I'm interested in those comparisons, there we go. This was not as good looking. And this is on a quarterly basis, remember. So they're comparing Q4, and this one is Q1. But it's just nice to see a higher number, right? And although all the focus is on U.S. commercial, we just want to see their business overall grow because it's going to obviously trickle down to here. Total revenue growth, 21%. So we beat the 20%, and we managed to, of course, destroy the guidance that they provided. So they sandbagged the hell out of that. But who knows? Maybe at the time they didn't have as much information, but 21% here. We want to see this continue to go up for the comparisons, right? So for Q2, we want to see how that actually turns out. And I'll do a comparison. I have to pull up the Q2 numbers. Now, adjusted operating income continues to go up. We have the margin here of 36%. So when you have a higher margin, it allows more safety, of course, and then it gives you more fuel to actually grow and invest that money when you have a chance. And Palantir is continuing to show that they can keep more and more of this money. Not of course, on a nominal basis, they're keeping more since there's a higher flow of revenue, but also a percentage of that. So it's just nice to see this metric continuing to go up. And I didn't even expect this to continue to do so. Now, commercial customer count, well, we got 69%, so get your laughs in, guys. Like I said, from last quarter, we had a lower. So this is actually something I've brought up a few times. The higher and faster your growth is, you have to beat it out. And now your baseline is much higher, so it makes it a little bit harder to hit those percentage points here. Now, I'm not saying that they're going to slow down at all. Maybe this is a factor here in not hitting or not exceeding the consecutive growth here of 22% we saw last time, it's still a nice number, right? So from 181 to 221, nominally, that's 40 customers. Then from 221 to 262, it's 41 customers. So they technically brought in more customers, but on a percentage basis, of course, remember the baseline. So we don't know if this is going to slow down or not, right? But this is what I wanted to see, them continue to grow this. And of course, it's nice to see their reference from before, a nice 69% growth here. But we'll have to see if the number in between here, is that actually going to scale up even faster? Are we going to get higher than 41 for the next consecutive quarter of growth? Considering how much they talk about the boot camps here. And customer count is probably our earliest metric to see when are people signing up, right? And that'll be interesting too if they ever provide metrics on that. The turnaround time on a customer that's going to actually sign up when they attend a boot camp, or how many boot camps it takes them to do it. And then, of course, the percentage of people who've always attended or who've attended and how many of them actually signed up in the end. So there's a lot of different ways you can look at it. And if they ever provide even a clue on that, that'll be nice. Even if it's off the cuff during the earnings call, it's nice to see, just get some inkling about that. This is the overall customer count here, 42%, nice. And even on the consecutive, we have a higher percentage, which is always great. Commercial customer count, yeah, of course, that's going to be good here. But it looks like internationally, let me see. So if we have 375 total from last year, so that internationally then would be 156. And then we got up here to 427 versus 262. I don't want to do the math in my head. Essentially, yeah, international commercial is still trying to figure itself out. Yeah, there we go. Now, number of deals, 87. I believe this is smaller, actually, in the number of $1 million deals. Last time was 100 something. Let's see. Q4 is their fastest time to grow, though, just so you know. A lot of businesses want to make sure they can get the spending out, right, before the end of the year, and they have a fresh year. So there's less number of deals. These are deals closed. It just counts ones that they signed out. They could be like 2-3 year deals, right? So you're probably not gonna have repeats here every single quarter or even from year to year per se. At least $5 million. So it went down as well. 27. The overall number of deals went down. 21 versus 15. So number of deals is down here, at least that they wanted to disclose. Now these are of at least $1 million. So that means we know from people who are signing up right now. If they're getting more customers signing on, it means that they're not necessarily signing the $1 million deals, even though we're seeing a big jump in the number of customers. So something to keep in mind. That's going to play out over the longer term, though, to see how they actually add on services, first of all, so that can make their deals. They can maybe sign another deal with an existing customer, but also just maybe their usage as well. I believe there's fees for the more and more usage that happens. So if you have like 1,000 users and it changes into like 3,000, you're going to end up paying more. But it might depend also on the contractual side there of what they're giving. I'm just refreshing here just to make sure that there's no new live stream up yet. Okay. Awesome. Let's keep on going to the slides now. This is always nice to see. A giant cash pile. We talked about this, 2 seconds ago on the Bloom. No. The newswire, the PR that came out. $3.9 billion. We have a lot more sitting in treasuries. So the Fed hasn't been lowering interest rates. I believe the latest one is noting we're going to freeze rates for now, or not freeze rates. Yeah, we're going to hold the rates where they are now. So not putting them down, essentially. So if you're sitting on cash, it's good, right? I would say if you want to be conservative or more risk averse, this is still fine. Obviously, there's probably some folks who do want something to happen with this cash. But at least from my own personal opinion, I'd rather be more prudent, considering we are sitting on these treasuries anyways, getting easy money essentially at this point. And that does help with the GAAP net income if I scroll up here, because it's not forcing us into a position of having to use the money per se. And Palantir has been pretty good about their operating income here. So anything from the interest side is just gravy on top. So I'd rather not have to rely on interest income to ensure that we stay positive here for S&P eligibility. It's just more prudent in my opinion. But $4 billion, basically, yeah, I don't think there's any. You could spend a little probably, and if that's associated with running AIP boot camps, setting up AIP now that we mentioned here, I think that's going to be important to use it wisely still. I know that you feel like you have some flexibility with $4 billion, but if you're an owner of the company and if you have shares in it, you technically own a little bit of piece of this cash, and you don't want someone necessarily spending it frivolously or wasting it essentially. So we'll see what happens here. It'll be an interesting day if we open up an earnings report and they say, oh, okay, well, our cash pile or our U.S. security treasuries, we're going to start investing it in XYZ because we can get ABC results now. So I think it'll be interesting to watch out for, and it'll be a really big moment, honestly. And I think it could cause probably some controversy for some people, depending on if they've wanted them to spend the money or not. And this also brings up the other point. People like to talk about buybacks. For me personally, so I'll give my own opinion here. I don't necessarily care for buybacks at all at this level for the company. And I know everyone has their own opinion on it. The biggest symbolic move, though, was talking about the buybacks, though, and having it available as an option. So it gives flexibility for management. It looks like we're not down, 10% at one point. But it looks like we might be settling. But this can always change, especially as the earnings call comes out. But like I was saying, with $4 billion and buybacks, and even if you're buying back such a large float of 2 billion shares, that's going to be really symbolic as well from management saying, we believe the company is undervalued and we should be buying our own stock at this point. And some people might also see that as a symbolism of them saying, oh, we don't know where to invest our money to grow faster. So it's a double-edged sword. I just like the balance that they're at right now, where they said, oh, we have money available to buy back stock if we so choose to. I think that's a great enough, I guess, at least for me as a shareholder, everyone's got their own thoughts on this. But for me, it's a great enough signal to say, okay, they understand where we're coming from. I don't necessarily want them to do it right now, right? If for some reason they drop to very, very attractive levels, then that's when a lot more questions will happen. But if they're flying up, it's like, why do you want to buy your stock at this point? But it could also mean that they believe it's undervalued. So there's a lot of ways you can look at it, but that's just my personal opinion. But it's nice to see this giant. This will be nice next quarter when it turns into $4 billion. Cash equivalents, and U.S. Treasury securities, and no debt. So that's delicious. I've been using that word a lot today, so I don't usually do that. But yeah, no debt in a high interest rate environment, or at least historically, right? We've seen some pretty crazy days before. And then we talked about this briefly. So 649 to 653. So this is for Q4 2024. Adjusted income from operations between 209 and 213. Full year, this was adjusted up as well. So 2.677 billion to 2.689. Let me just do some quick math here for you all. 2023 Q2 earnings release. Oh, did I click the wrong one? Or is there a revenue? Let me just double check. Second quarter 2023 revenue 533. Okay. 533 versus 653. I'm just using the higher numbers. Oh, here's a calculator. Okay, so 653 minus 533, 120 divided by 533. So I like that. That's still an increase, actually 22.5% if they hit top line of 653. Now, even better is if, it happens like what happened for Q1 just now, that they exceed this. So if we can hit a 22.5, maybe 23% growth rate, this is an exciting time for Palantir, actually. I probably should have paid more attention to this when I first saw the PR, but Palantir getting the chance to showcase, oh my God, we dropped down to 18%, 17% growth rate. And, if you've been around for a while, we heard 30%. 30% is still a long way, just to be completely honest. But if we're trending in this direction and being able to turn around the company from, we released AIP, we got AIP boot camps, we're we have existing customers. We're getting them to buy more services and expand their usage of Palantir's products, not just say if they're only using Foundry, but they're also using AIP, and they built their ontologies. And then even if they bring in new people for their AIP, they want to get their Foundry set up maybe, or they want to get ontology set up. That's just more and more opportunities. And then the other factor here, I think, network effects. So there's a lot of angles you can look at this. Network effects wise, if people are used to working with Palantir's products, say I'm an analyst right now, I work for a very small, focused health tech company. If more and more people get familiar with that and they can just go to another job and say, oh, I have experience with Foundry. And I know Lord Grimm has done a great job. If you follow him on X, he brings up posts essentially that are like, oh, they're looking for a job description. And then he's able to see that, oh, they're requiring Foundry. So more and more requirements for Palantir, at least on the employee end, can help network effect wise in them getting adopted. Now, then just signing up more customers, of course, is still just as important. And I think that's going to be a big driver in them being able to continue to grow. Let's see what the next slide's here. So the appendix, let me just see if I've missed anything. Net dollar retention. All right. It's not that small this time, but it's definitely still small. I believe it was 108 last time. I just want to compare the sizes for net dollar retention because I did a whole video on each and every presentation and how much smaller it has gotten. Let me see how small. Oh, okay. It's the same size, but it used to be like a whole slide and it was a very big, like, 120 something %. We're like, wow, that's amazing. And then, 107, 108 recently. And then now we've gotten it back up to 111 and, we have to work off a larger base here of customers. So it is nice to see this stabilizing. Now, if it accelerates back upwards, that'll be very nice to see as well. And that's probably going to be due to AIP with existing customers and then expanding that revenue with them. But I'm not going to say that this is necessarily the most important metric for them right now besides customer count. But it does show that existing customers, and if it stays above 100% for sure, it means people are happy with Palantir and then what they're offering, and if they're able to deliver on what was contracted, of course, but even give more value than what's expected. It has to make sense financially, right? If you're going to stick with Palantir, and if you're especially going to expand how much you're going to use Palantir. So I did see in the chat, when does the call start? It should be 5 o'clock Eastern time, but let me just go here. I believe there's a link as well. Oh yeah, here's the PR for the earnings. Where's the link? I believe the call is on here. Oh, news. I believe it's under news. Not news. Events. There we go. So if we go to the webcast link, yeah, it's going to take you to the YouTube channel. Yeah, this is still going to run here. I've just been refreshing their channel page, but it's going to start in 8 minutes. So I just want to hope I got through all the numbers here because that's honestly the most important thing. But then now that we've gotten at least a slight understanding of the numbers, we can get context from management. I hope they really talk about AIP boot camps as well as if they can give any numbers on the back end, how much they're converting people to sign with Palantir, because that's going to flow into the customer count and then eventually revenue. And I'm also curious to see how many boot camps, because it was mentioned in the Bloomberg article. Someone said, oh, if it doesn't work out for you, then just do another boot camp. So it was one of the people they interviewed. So I thought that was a very interesting thing to quote for. So it sounds like there's probably cases of this that people are not signing up on the first time. And that's, I guess, to be fair, right? If you're going to sign a large contract with Palantir, but I don't know how small these are. But it can be invasive too. So just the technical aspect of signing with Palantir and what it entails can be quite an investment. And that can be investment in time, resources, FTEs or full-time employees, or just getting management backing there because you're signing up. Well, if any executive sponsor signs off on something or recommends something, right? If things go wrong, it makes them look bad. So I'm sure if you can get more use cases out of it for free as a business, that wouldn't be a bad thing. Let me just get back here. So we have the link, just waiting for them to show up. Oh, this is the old one. Okay, so that was net dollar retention, rule of 40. I guess it's easier to look at it in numbers. 20%. Yeah, so all they're doing is adding these two up together. Okay, so I think this is, it's like one of those rough metrics that like is industry percent SaaS. Yeah. SaaS companies above 40% are generating profit at a rate that's sustainable, whereas companies below 40% may face cash flow or liquidity issues. Okay. And I guess if you take like a newer tech company, that could be an issue. But someone like Palantir, I'm not afraid of like not bankruptcy at least, unless someone goes on a spending spree or something, or for some reason needs to take out more debt. But this has been growing. So it actually went down until Q2 2023. That's probably the flow of for AIP. And then it really looks like, AIP has helped them bring this up. I mean, just based off timelines. It's good to see. Let's see, reconciling cash flow from operating to adjusted free cash flow here. Okay, this is always nice to see their cash flow. Positive. Q1 2024 though. So let's see. The margin is lower though. Let me see. Operating activities add 21. Okay. Gross profit. Yeah. So this has gone up. This is the one they highlighted in the highlights. They're like, oh, look at this. Look at this. Very good. And let me just bring up the chat too. I feel like I'm just talking at you guys. I kind of get into the rants. So let me just make sure that we can all talk to each other, because the call, for those who are wondering, it should be 5 Mountain Time. So they'll probably start the, oh, not 5 Mountain Time. That's way too late. 5 Eastern Time, 4 o'clock Central Time, which is where I'm at. Their timer's here at 4. So for those who are newer too or haven't listened to earnings calls, essentially what happens is they go over the financial results. You'll hear one of the management talking through it. Essentially, he'll talk to the slides again. That's exactly what's going to happen. He's going to talk to the slides. It won't be as cool as me, right? For sure. Just let me know if I did it in a cool way. Just kidding. But after that, then we get the call. We're going to have them around the table. I'm sure it'll be, similar of how they sit all the time. You have Sankar, Karp. Always like to hear from them. But we just want to hear extra context around earnings, and more forward-looking information is what I prefer, obviously. Just so if we have some form of roadmap of what made the results good and then how they're going to keep leveraging it and make it more outsized for following quarters. And of course, if they see any headwinds possibly, so that's bad, if they can give us some warning ahead of time if something's coming down the pipeline that we may not be expecting. But let me look at the price too right now. Oh, okay. This is really seesawing back and forth. For those who have been watching here, I have an hour candle, so let me see if I could change the candle really quick. No, this is not showing. Oh, what happened to my candle? I'm new to using Webull, so I'm not sure what happened to my after hours candle. If someone in the chat can let me know and can help me fix it. I'm a noob at this, but let me get the chat up as well. I feel like I've not been doing a good job of this. And I haven't been live streaming too much, as you guys have noticed, but special occasion when it comes up. Karp will get on the call, pull off an Elon. Yeah, who knows? Tomorrow's going to be red, but we'll reverse on Wednesday. Need time to buy more shares. Will it go below 22? Who knows, right? New contract. Yes, they do. It feels like they do all the time. It usually gets quiet when we lead up to earnings. I like to... Actually, it's been pretty quiet, actually, on the news page for them. Here. So last one we got 5.6, and then we got a pretty big gap here of 4.17. But before that, we were seeing a few things. So we got this deal, and then we got their awardable status for the TradeWin Solutions Marketplace. So that's still going to be good for them to hopefully pick up some government revenue. But it feels like it hasn't been popping up too much, and not all the deals are going to be announced on here. We can get them on like PR Newswire sometimes as well. Let me just bring up the chat some more. Oh, that would be silly. Dr. Carbon China right now, working with BYD, develop FSD. Well, if you hold Tesla, that would be, I don't know if you feel like you'd be threatened by it, but the power of the Chinese government, right, and the companies there, buy and hold to create judgment. Well, I mean, if you look at it from a percentage wise, like it looks like it's a lot, right? 5% in like a matter of seconds is a lot. Oh, we got a live notification. Let's see if this is starting. Why am I so bad at this? All right. And I have to make sure that the desktop audio is on. So when it's playing, I'll keep an eye out for the chat to make sure. Let's see, 3:58. Yeah, it looks like it's going to start in a couple minutes. And I'll make sure to full screen this too. When it's playing, I just want to make sure that the audio works for you guys. It should. It's not going to be connected to my mic like the issue I had earlier. So, and I'll keep an eye on the chat too. If you guys are going to talk in there, I'll talk with you guys through that. But I will shut myself up when we get to. Oh, it's not playing right now. Is there awesome music playing? Let's see. Okay, no audio yet here, so we'll give it a few minutes. They're not necessarily going to start exactly at 4 o'clock. I'm still reading through the chat. Breaking news. Stock covering up. Yep. Shaking out the weak hands. Yeah, actually, you could say that. If we were down almost like 10% at one point, but looking at the minutes, for me at least personally, I work during the day. I had the live stream kind of into my work hours here. So if someone, I don't want to get in trouble, but essentially, the daily kind of candles doesn't really matter to me. Maybe I'll see how it ends at the end of the day, but I don't even look at the price every day, except for days like this, right? It's definitely much more interesting.
I'm Anna Saro from Palantir's finance team, and I'd like to welcome
Let me know in the
you
chat
to
if
first
it's
quarter 2024
audio's okay.
earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We started the year exceedingly strong, with revenue of $634 million, an increase of 21% year over year, driven by the momentum of AIP and our continued strong performance in U.S. commercial. Our results also highlight the growing strength of our U.S. government business and our enduring mission-critical work. The continued interest in AIP is loud and clear in the conversations I'm having across our customer base. We've shared our plans to capture the market with AIP, and our results show that our strategy is not only succeeding, it is accelerating. While still early days, our focus is on building the foundations of a long-term business. We intend to relentlessly continue landing new customers and subsequently expanding those engagements as our products gain traction and have meaningful impact within enterprises. Not only are we increasing the volume of new customers, but I'm pleased with our ability to grow these new customers as well. With regards to landing new customers, we've sustained our high volume of boot camps, with over 915 organizations participating to date to meet inbound demand. We are also seeing substantial deal cycle compression. As one example, a leading utility company signed a 7-figure deal just 5 days after completing a boot camp. Another customer immediately signed a paid engagement after just 1 day of their multi-day boot camp, and then converted to a 7-figure deal 3 weeks later. We expect the favorable unit economics and higher throughput to continue to accelerate our business. U.S. commercial is where we're seeing the greatest transformation. While Q1 is seasonally our slowest quarter, AIP adoption by new and existing customers helped drive notable growth in customer acquisition and revenue in our U.S. commercial business. In Q1, we added 41 net new customers in U.S. commercial. Our customer count increased 69% year over year and 19% quarter over quarter, compared to 8% quarter over quarter growth in Q1 2023. Excluding strategic investments, our U.S. commercial revenue soared by 68% year over year and 22% quarter over quarter. New customers span a variety of industries, as AIP's applications seem endless. From the largest independent bottling company in the U.S. to a leading energy and infrastructure company and a multinational airline. In Q1, our U.S. commercial business had customers from 56 of the 74 GICS industries. As we're landing new customers, we're also seeing those customers expanding their work with us. Across my conversations with customers, I'm seeing the recurring theme of them asking me how they can do more, faster with enterprise transformations driven by AIP. We're showing them how they can move their AI strategy beyond chat. Existing customers such as Lowe's, Cleveland Clinic, and General Mills, among others, are realizing the extensive possibilities of AIP within their own enterprises and increasing their scope accordingly. Lowe's accelerated its engagement from a starting point of no AI to utilizing production-level AI for over 1,000 customer service agents, resulting in a 75% reduction in overdue tasks. As one of its directors noted, quote, "We achieved this in just 4 months and onboarded 1,000 users within 3 weeks of rollout." Cleveland Clinic committed to a 10-year expansion deal to deploy more broadly across its hospitals. General Mills expanded the scope of its work further last quarter, as its senior director noted, quote, "We're saving on average about $14 million annually, and it's really only deployed to part of our network as we speak." We're seeing rapid expansions within key customer accounts. For example, a Fortune 500 industrials company signed a 3-year expansion deal, which increased the annual revenue run rate of our work with them nearly 5-fold compared to our initial engagement with them in 2022. A Fortune 100 retail company started a pilot in Q2 2023, expanded to a use case conversion in August, then expanded its work to a $12 million ACV enterprise engagement last quarter. These are just a few examples. More and more customers are expanding their work with us due to AIP and the incredible traction our software has within their organizations. Turning to our U.S. government business, our revenue continued to accelerate last quarter, increasing 8% quarter over quarter versus 3% quarter over quarter in Q4, with our products every day having critical impact on current world events. We see continued demand for Mission Manager and positive reception to First Breakfast. Last quarter, we were honored the U.S. Army awarded Palantir over $178 million to be the sole prime contractor to build a next-generation targeting node under the Titan program. This marks the first time that a software company has won a prime contract for a hardware system and exemplifies Palantir's position as the software prime, opening the door to vast new opportunities. It is with immense reverence that we approach building and maturing our revolutionary capabilities for our warfighters. In our international government business, we are continuing to ramp up the critical work for delivery of the UK NHS Federated Data Platform, as well as providing defense capabilities to allied partners around the world. Looking at our business and its impact broadly, I'm invigorated about the year ahead. We have never had more conviction about AIP and the power of our software, as well as our continued efforts supporting the most critical missions around the globe. I'll now turn it over to Shyam.
Thanks, Ryan. The clear signal from AIP bootcamps is that AI is for builders. So many anecdotes and quotes from customers, all reinforcing the same point. They are getting more done in a day or two in AIP than in a quarter or two without. We have pioneered the approach to getting beyond chat and unlocking the value of LLMs in the enterprise, taking inherently unstructured inputs that are flying around the enterprise, be it emails, Slacks, PDFs, images, comments, audio, and turning them into structured actions and outputs. Taking an email from a customer requesting a different product mix and turning it into an actual inventory allocation in the ERP system of record. Taking a health claims denial and programmatically generating the documentation and supporting evidence from the clinical records and contracts. Automating P&C insurance claims processing, and even in government, using vision models to narrow candidate products driving foodborne outbreaks at CDC. And we have started rolling out Build with AIP, a series of developer and builder-oriented tutorials and reference implementations that enable builders to ramp quickly on the primitives and power of AIP in practical examples that unlock every employee at every customer. Our growth is being driven by the incredible dynamism of the U.S. commercial market, and we believe the U.S. government will follow. With this momentum, we have launched builder bootcamps in the U.S. government. The U.S. Army recently issued a memo identifying 2 Palantir systems, AIDP and Army Vantage, as amongst the 5 total platforms approved for builders. The U.S. Army's Artificial Intelligence Integration Center, AI2C, at Carnegie Mellon, leverages these platforms for half of their active projects and recently built an application for the 18th Airborne Corps with OSDK. Our DoD customer recently hosted a hackathon showing the value of the open Joint All-Domain Command and Control, or JADC2, SDK that we have been pioneering. One participant commented, "Nominating targets with Gaia Assist turns a 6-hour workflow into 10 seconds." We continue to invest in Mission Manager and will be extending it to the edge with our EdgeX infrastructure in U.S. government. Now customers can use their cloud instance as an integrated development environment for edge platforms. Centrally build, test, and continuously deploy and manage multi-vendor Big Tent edge ecosystems. It covers everything from streaming pipelines, OSDK-backed applications, native Gotham applications, and third-party apps. We are excited with our team of rockstar partners to deliver on the U.S. Army's Titan program. This marks the first time a software company has won a hardware contract, firmly establishing the role of the software prime. We believe the core of this software, Target Workbench, will be critical in every cockpit, every vehicle, and every ship. Finally, I'd like to acknowledge the eye-watering work of our service members and our allies in meeting the moment defending against the massive Iranian attack on Israel. The Gotham investments in JADC2 performed excellently, and we're building even more, even faster. I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. Q1 was a strong start to the year. Revenue growth accelerated to 21% year over year in the first quarter, driven by momentum in AIP and our U.S. commercial business, and a re-acceleration in our U.S. government business. We delivered our 6th consecutive quarter of GAAP profitability, generating a record $106 million of GAAP net income in the first quarter. We also delivered our 5th consecutive quarter of GAAP operating profit, generating a record $81 million of GAAP operating income in the quarter. Adjusted operating margin expanded to 36% in the first quarter, continuing to highlight the strong unit economics of our business. The revenue and profitability outperformance drove a 3-point sequential increase to our Rule of 40 score from 54 in the fourth quarter of 2023 to 57 in the first quarter of 2024. This was the 3rd consecutive quarter of an expanding Rule of 40 score. Turning to our global top-line results. We generated $634 million in revenue in the first quarter, up 21% year over year and 4% sequentially, exceeding the high end of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, first quarter revenue grew 24% year over year and 4% sequentially. Customer count grew 42% year over year and 11% sequentially to 554 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $55 million per customer. Now moving to our commercial segment. First quarter commercial revenue grew 27% year over year and 5% sequentially to $299 million. Excluding the impact from strategic commercial contracts, first quarter commercial revenue grew 36% year over year and 4% sequentially. We had a very strong quarter of commercial bookings. First quarter commercial TCV booked was $505 million, representing 187% growth year over year. Our U.S. commercial business continues to see unprecedented demand driven by momentum from AIP. First quarter U.S. commercial revenue grew 40% year over year and 14% sequentially to $150 million, surpassing international commercial revenue for the first time. Excluding revenue from strategic commercial contracts, first quarter U.S. commercial revenue grew 68% year over year and 22% sequentially. AIP is driving both new customer conversions and existing customer expansions in the U.S. In the first quarter, we booked $286 million of U.S. commercial TCV, representing 131% growth year over year. Total remaining deal value in our U.S. commercial business grew 74% year over year and 14% sequentially. Our U.S. commercial customer count grew to 262 customers, reflecting 69% growth year over year and 19% growth sequentially. We generated $149 million in international commercial revenue in the first quarter, representing 16% growth year over year, but a 3% sequential decline as a result of continued headwinds in Europe and the revenue catch-up in Q4 that we noted last quarter. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts was $24 million in the quarter. We anticipate second quarter 2024 revenue from these customers to decline to between $7 to $9 million compared to $19 million in the second quarter of 2023. We continue to anticipate 2024 revenue from these customers to be approximately 2% of full-year revenue. Shifting to our government segment. First quarter government revenue grew 16% year over year and 3% sequentially to $335 million. First quarter U.S. government revenue grew 12% year over year and 8% sequentially to $257 million. As Ryan noted, we're excited to be the sole prime contractor under the Titan program and will continue pursuing other defense opportunities. We believe we're well positioned to see growth in our U.S. government business over the course of 2024. First quarter international government revenue grew 33% year over year and declined 9% sequentially to $79 million as a result of the revenue catch-up in Q4 that we noted last quarter and continued headwinds in Europe. First quarter TCV booked was $904 million, up 128% year over year. Net dollar retention was 111%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the first quarter with $4.1 billion in total remaining deal value, an increase of 22% year over year and 6% sequentially, and $1.3 billion in remaining performance obligations, an increase of 39% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $226 million, representing an adjusted operating margin of 36% and marking the sixth consecutive quarter of expanding adjusted operating margins. Q1 adjusted expense was $408 million, up 2% sequentially and 2% year over year. Turning to the balance of the year, given our conviction in the U.S. business, coupled with our margin expansion, we intend to boost investment in resources in the U.S., including in AIP and specific defense opportunities. While we expect expenses to ramp starting in Q2 through the back half of the year, we remain focused on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and GAAP operating income. In the first quarter, we generated GAAP operating income of $81 million, representing a 13% margin, our fifth consecutive quarter of GAAP operating income and fourth consecutive quarter of expanding GAAP operating margins. We generated first quarter GAAP net income of $106 million, representing a 17% margin, our sixth consecutive quarter of GAAP profitability. First quarter adjusted earnings per share was 8 cents and GAAP earnings per share was 4 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 57% in the first quarter, a 3-point increase to our Rule of 40 score from the prior quarter. We will continue to strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the first quarter, we generated $130 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 20 and 23% respectively. In Q1, we also repurchased approximately 500,000 shares as part of our share repurchase program. As of the end of the quarter, we have approximately $990 million remaining of the original authorization. We ended the quarter with $3.9 billion in cash, cash equivalents, and short-term U.S. Treasury securities. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn. Now turning to our outlook. For Q2 2024, we expect revenue of between $649 and $653 million, and adjusted income from operations of between $209 and $213 million. For full year 2024, we are raising our revenue guidance to between $2.677 and $2.689 billion. We are raising our U.S. commercial revenue guidance to an excess of $661 million, representing a growth rate of at least 45%. We are raising our adjusted income from operations guidance to between $868 and $880 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our Q1 earnings. I think it is fair to say we crushed Q1 in the U.S. We are on fire. You see this in our Rule of 40 being 57. You see it in the 68% growth in U.S. commercial. If you do apples to apples, following on 70% growth last quarter, or 71% if you do apples to apples, taking out SPAC revenue. You see it in the deal growth in the U.S., growing from 70 to 136 in a year. You see it in the general enthusiasm around our products, especially in commercial, but also in government, which has begun to reaccelerate. You see it in general in our customer growth in U.S. Comm, which grew 69%. And again, we are growing these numbers while maintaining a Rule of 40 score of 57, which basically means we're doing the impossible. We are growing the company while investing in our core IP, or our software development. We are winning in the U.S. And then that kind of then leads to the question of, why are we doing so well in the United States of America? And the main reason is we built software infrastructure that allows enterprises, both commercial and government, to move beyond chat, move beyond self-pleasuring, to actually produce things that are valuable. And whether this is tasking satellites in the commercial context, or changing margins, or changing American workers into Japanese engineers using our software platform and large language models, I believe we are the only company in America, the only really relevant market, that will allow you to do useful things with large language models. And that is what's generating 68% growth in U.S. Comm, again, with a nascent sales force, doing it in a way that is not kind of playbook specific, thin technology. It barely works, and you have a sales force, but with 10 years of IP that presupposed LLMs before LLMs existed. You see the same thing in the government. Sham and others will talk about it, but our mission footprint, whether it's in Ukraine, Israel, or in the United States government, is stunning. There is basically no conflict in the world that is not that where Western allies are involved and the battlefield's involved and the stakes are life and death, where Palantir is not the first call. And our ability to do this going forward is going to be even stronger because of past investments, and also the unity of our culture and the strength of our leadership, and in general, 20 years of understanding how to do this. It is true that it is mystifying to people, including analysts, how could this possibly be working? But it is working. And this is the sixth quarter of profitability, I dare remind people that there was a time when no one thought we'd be profitable, when no one thought we could crack commercial, where revenue per person was called into question. That also grew roughly 26% year on year. Revenue per person generated at Palantir. We do have headwinds in Europe. 16% of our business in Europe. Europe is gliding towards 0% GDP growth over the next couple of years. That is a problem for us. There is no easy remedy for that. It is also the case, though, that U.S. comps surpassed U.S. European commercial, and we see that as favorable. I, in general, think this is just Palantir's time. Now, there are lots of questions about why we are so active in defending the values of the West. Our belief that the West is a superior way to live, and our ways of organizing around that are the reason why our products are transformative, the reason why we have the best people in the world, the reason why a Palantir degree, as it were, is much more valuable than an Ivy League degree. Before the Ivy Leagues even, embraced the thin, new, woke religion, otherwise viewed as an intellectual cause, but in fact is a way of organizing things so that the greatest institutions of our time disappear and turn into discriminatory dysfunction. Palantir is a counterexample, and I'm super proud of the results. We are going to continue to execute, especially in the U.S., and I'm very happy to have you on the call.
Thanks, Alex. We'll now turn to questions. We received a few questions from our shareholders about AI and competitiveness. Matthew and Ryan ask, how does your AI strategy differ from your competitors?
Well, we're executing our strategy at an unrelenting pace here. If you go back to the launch of AIP, I discussed how we thought the models were going to commoditize, and that's really borne out. We see that underscored with Llama 3 70B being released now. But the real opportunity for us, as Alex made mention of, is that people are using LLMs incorrectly in the enterprise. And as far as I can tell, we're really the only company to figure it out how to help our customers get beyond chat, leveraging the investments that we've made in ontology, really harnessing this pattern of implementation where you're taking unstructured inputs and turning them into structured actions and outputs that drive economic value in the enterprise. Now, there's this thing that some companies have started saying where only 10% of my customers have data that's even AI ready to begin with. I think that's completely wrong. Maybe they don't have something to sell in the present moment, so they're trying to sell the past. But if that was right, how is it that in a single day boot camp, we're able to add value on top of our customers' messy, extant data? Ultimately, software that works. And to the present moment, I'm focused on helping enable builders in the context of the enterprise. I made mention of the DoD hackathon, where a single user built an AIP logic function, surfaced in Gaia Assist, that took a targeting process down from 6 hours to 10 seconds. More generally, in commercial, with Build with AIP, we are releasing a slew of tutorials, quick starts, and reference implementations. They're going to help turn every customer, every user into a builder to unlock the potential of what they can harness on top of AIP. And that's the way ahead, and that's why we're still ahead.
And I would say, I don't believe we have competitors. So I don't believe in the U.S. commercial market we have competition. I don't believe in the U.S. government market we have competition. I think that's the reason Ukraine and Israel bought our product. We are differentiated because in order to actually make AI work, you need an ontology. No one has an ontology. To Shyam's point, you have a lot of people running around saying the data isn't ready. Of course it's not ready because they don't have Foundry. If you have Foundry and the ontology, it is ready. If you have Foundry, our ontology and Apollo, you can actually work at the edge. If you don't, you can't. And outside of America, we would still have to convince people of this. Inside of America, we're not really convincing people that we have the only thing that works. We're showing up, we're showing it working, and we're saying this is what it costs, and it's working really well. But I currently don't believe we have competition. We have a lot of people who are like the Palantir of Iowa or the Palantir of Harvard or the Palantir of Uruguay, but they're not Palantir. And it's going to take a long time to actually build what we have because you'd have to actually understand what is special about the software infrastructure of having the combination of Apollo, Foundry, and the ontology. And then you would have to build on top of it so that you can actually do these handoff functions with large language models. And luckily for us, there is not a consensus at the investor level, VC level, or among analysts that we have the only thing that works, and that means there's just going to be very little investment in copying and doing what we do. And investment in what we do outside of America would be hard to do anyway, because the ecosystem, a term I don't particularly like, to get this done is in America. So you would have to do this in Silicon Valley, and Silicon Valley is focused on, to Shyam's point, the wrong things.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thanks. So good, great quarter. My question is, can you just talk about what conversion looks like from boot camps, and maybe just double click on a typical customer? What's now you have more and more data points. What's that showing you about conversion from a boot camp to actually signing a deal?
Yeah, absolutely. I can talk through that. So we announced boot camps, 2 quarters ago as a go-to-market motion, and we're seeing that play out as you see that in the results. So in 1 to 5 days with a boot camp, we're able to do what used to take 3 months, and we're seeing, as I talked about, we're seeing customers, shortly after boot camp sign 7-figure deals, and we're seeing the ability to be able to show them what they can do on the platform with real data much more quickly, and then have that monetization conversation much sooner. And so then you see that in the results, 69% growth in customers in U.S. commercial. We closed 136 deals in Q1 this year compared to 70 deals in Q1 last year in U.S. commercial. That's a 94% year-over-year increase. And so we're seeing, it's still early in the process, and we're seeing the results from the boot camps and seeing that they're working in the monetization from them.
The boot camps also have, quite frankly, another massive advantage, because de facto it sets a standard that will be very hard for any other company to meet. So even if you don't buy our product, you de facto have locked in an idea of what's possible. And that means that at some point when you go try your own thing and it fails, you've seen, okay, well, I've seen the art of the possible, and therefore I'm going to go buy it from Palantir at some point in the future. The boot camp motion is an early motion, and I don't think we would say we've cracked the sales motion. In fact, I think our 68% or 94% growth on deals, or 69% on customer, you have to look at this as we are at the way early days of figuring out how to actually get customers to buy our product. We are good at educating customers on what is the art of the possible, and then some portion of those customers buy it. So I expect as we get better and better at that, our numbers will increase. But it is really early days. We're not flawlessly executing on our sales motion. And I would say I saw this when we built our anti-terror platform. One of the most important things we did is go out and educate the world about how you could fight terror and maintain civil liberties. And most people we actually offered our platform to did not buy the product year 1, but by year 5, they'd all bought it. And they bought it because they're like, okay, well, we see how you could integrate data across disparate data sets, maintain a security model, fight terrorism, and be in conformity with the law. And even if you say, oh, I'm going to go try to do this myself, in fact, you can't. And then that sales motion, so the relevant integral for this is not just what you close in quarter. It's like it is kind of throwing a carpet on the whole market and saying, okay, well, this is the standard. If you can do better than this, buy it yourself, build it yourself, acquire it from other people. And if you can't, come back to us, we're here. And that worked very, very well. I mean, almost every country in the world, not every country, but almost every country in the world that could buy our core anti-terror product at some point did.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So it's also in the line of implementation, but less about the customer, because I think the demand you're seeing is unprecedented, and we can see that you're seeing that on both sides, like from the government side and the commercial side. What I'm really curious about is if you can give us some color around what is next in terms of actually tackling this demand and implementing the efforts and supporting a way larger customer base. what is hiring, what is partnerships, what is next there, and what is the most challenging from your point of view?
Well, I can certainly take that. Maybe Ryan will have some comments on the partnership side and the growth of that ecosystem. But on the product side, this is one of the reasons I'm most excited about Build with AIP and the boot camps that we're running after we have deals with customers. We're really igniting a movement within the customer in terms of unleashing their builders and tackling use cases. There's been a shift. Like, we still love to work on our customers' hardest problems and most important use cases to deliver crushing value very quickly. But concomitant with that is, how do we enable every single one of their builders to get going? And I can think of the most recent, say, 2 quarters, our ability to come in there, help them solve one problem, but ignite hundreds of use cases that they're able to do on their own. So really, even without needing additional partners, leveraging repeatable reference implementations, reference architectures, quick starts, tutorials that get them going. Again, and across different, we have these for all the industries that we're working in, for all the functions within these customers, and including in government itself.
And on the partnership front, you see, we announced our partnership with Oracle. We're seeing hyperscalers that are realizing that in order to drive compute, you need to move beyond chat, right? You need a solution that's taking organizations beyond their, for their AI strategy, beyond chat. We're seeing that happen there, and we're expanding, the partnerships across the space with partners implementing at our customers as well.
We have, across our company for the first time, ongoing discussions with hyperscalers that are well known and with others, where we're basically saying, look, we have the ideal product, you have the ideal distribution, you can build on top of our product and then capture your distribution at a higher margin. We are having discussions like this in Japan across UHG, but we have our efforts to provide our core infrastructure to defense tech startups, which are going very well, simultaneously allow us to expand our core architecture, core software development into the DoD, but also make us less competitive with people, which helps us a lot. So a lot of what slows us down is people pretending they're competing with us. So finding ways to build partnerships with those people so they don't compete accelerates our revenue. And in US Comm, it's a lot of what Shyam is saying. It's we are allowing customers to do what we had to do in the past, which is supply Palantir software engineers. There are just not that many Palantirians, so we can't scale. We have to allow encourage and provide a platform where they can do it. And I would say what you see both on AIP and on Foundry is de facto customers using our product pretty much on their own. And that's, again, why that you see a revenue growth up to 26% compared to last year on per person revenue, because we're making more money with the same number of people, roughly. So, and that's precisely because of these things that we're doing. And so that has a lot of benefits for us, both alignment and quality of revenue. That's why you have this that's why we have 57 on the rule of 40. That's why our revenue is growing per person. That's why we can get away with sales that are not perfect. And we're thinking a lot about how to do that.
Thank you. Turning back to a question from our shareholders, a lot of people have noticed that Palantir is pretty outspoken when it comes to geopolitics. How has this been received?
Well, it's a complicated question because I think internally, there have been people who have disagreed. There have been people who have disagreed to the point where they've left. And this has gone on over the last 20 years. When we refused to walk away from Special Forces, the U.S. Army, when we took over Maven, when we refused to stop working with Homeland Security, when we had discussions about which countries we'd work with and which countries we wouldn't. More lately, in a more timely version, when we supported Ukraine, it was less controversial. When we sold Israel our software, that was arguably more controversial. The fact that I take, I think the central risk to Palantir and America and the world is a regressive way of thinking that is corrupting and corroding our institutions, that calls itself progressive, but actually, and is called woke, but is actually a form of a thin pagan religion. That is a real danger to our society. And it is a real danger to Palantir if we don't discuss these things. The reason we have by far the best product offering in the world is because we have by far the best alignment around how to build software, what it means to build software, full alignment with our customers, a view that the Western way of living is superior and therefore it should be supported by the best products. People at this table have been in the trenches for over a decade each. Why do they stay? Why do they fight? Why do we come and do these calls? Why are we fighting for individual investors? Why do we actually care about revenue growth in quarter? I mean, honestly, everyone at this table has a lot of money. It's like we care and we fight for these things because we believe we are fighting for a stronger, better, less discriminatory, wealthier, more open, and better society by providing the friends of the West, U.S. industry, U.S. government, our allies, with by far superior products. And that's, by the way, how and that's how we align with our customers. By the way, I have customers who disagree with me, but they sure as hell know I'm telling them the truth about what we believe. And probably more importantly, they know we're not sophists. They know we believe in things. And that's why we fight for this culture, and that's why we fight for our products. And that's why our products are growing. Again, you can repeat all these numbers over and over again. How do you get 68% growth in U.S. Comm with a 57 rule of 40? How do you nearly double your customer count, your deal count, your customer count, all these numbers? You do it by having full alignment and the best products in the world. Or you can do it by having weird things that barely work and trying to manipulate clients into buying your product until they realize it barely works because it's thin and of no value. And that's just not how we roll at Palantir. So it has been really, and by the way, on the last note, how do we have the best investors in the world, especially individual investors? Why do they stick with us when times were hard? Why do they fight for Palantir? Why do they, every time someone writes something inane, Palantir's gone MAGA, Palantir's doesn't have a product, Palantir doesn't have margins. I'm sure this quarter, Palantir's growth is decelerating despite the fact we're obviously crushing it in America. Palantir is too crazy. Palantir will never be profitable. Palantir can't IPO. Palantir is too weird and odd to produce something that will be disruptive. We knew it was bullshit. The people who out on the front fighting against that BS, fighting against lazy, inept, discriminatory in the sense that is ignorance, people maligning Palantir, do it in great part because they believe that we are fighting for them, and we are. And we're fighting for ourselves, and that's why we have such a great company. So thank you.
Thank you. That concludes Q&A for today's call.
All right, just unmuted my mic. Let me get my face here. Well, it's not my face. Oop, that's old. Okay, that was a call. I've been taking notes, so it's not like I was just listening here. So I was actually. Oh, let me. There we go. Let's close that out. So let me just give my thoughts on the call. So let's look at the price here. So we're down 5%. 6%, right? It's been fluctuating. I think at one point I only saw it down 4% in after hours. It'll be interesting, honestly, to see what happens on, not today's Monday, Tuesday, tomorrow, even pre-market, right? But when the trading hours count, right, technically, we'll see if this is continued or if the market is still trying to figure out where they want to go, what do they like or don't like. It seems that the call itself didn't necessarily have an impact here since we're still kind of floating around where we are. And there are some things I wanted to highlight too, my quick notes. So this will be the last part of the segment, of course, but we'll see how long it takes. So in the beginning business update here, and you could probably see far ahead, but what caught my ears, and I think a lot of people's ears in the beginning, those 7-figure deals, right? Being able to sign them from a boot camp, but I'll talk about the caveats later from the Q&A. But it's possible, right? They're able to hit those big deals with a boot camp. They're able to get someone that's interested in signing up with the Palantir. But note, there is a slight delay, and that makes sense, right? They build a use case 7 days after boot camp. They show their management. They figure it out, and then they get a deal signed, right? And then another one signed within 3 weeks. But it shows the power of it, right? Someone getting exposure and being able to actually use the product and learn how it actually brings value. And then from here, it shows that they can justify a 7-figure deal in how much that they're getting from them. So I think it's just important to note those anecdotal sides first, right? But important things said later on the call. And of course, they had a lot of general stuff too. They talk about being software prime for Titan. We've talked about that briefly earlier in the call. But I was surprised they brought up the UK NHS. They want to make sure that they someone from the NHS or someone in UK might be hearing about this even for the first time, even though the deal was signed late last year. But work is starting on it, as well as there was another deal for one of the consulting companies as well to provide their services and help with the FDP wrap up. So that's important to keep note of. But also, we hear some anecdotal things. Clients are getting more done in a day and then getting more done in one day than a whole quarter, things of that nature. Now, they also talk about AIP, how they can share this information. The hackathon, I think, was kind of a nice thing to hear from management. So here I might want to talk a little bit. We're hearing a little bit more positive things about government, right? They talked about, well, at least on the United States side. So they still talk about Europe being having headwinds and all that, and just overall economically, they're just not the place growing. So it's harder to get growth there yourself and capture it. And of course the cultural aspect as well. So US is really the way to go, but they're bringing up government more and more, which is a nice change from previous earnings, considering it's like, oh, slow down here. But in the far past, for the original kind of folks who are used to hearing about carpet, it's bumpy, right? Or lumpy. Sorry, that's the exact word. It's lumpy. So if we're going to see maybe a ramp up again for government revenue, that would be nice. As we saw from Q1 to from Q4, we're doing much better in that respects. And then this kind of went under the radar, a repurchase. That a lot of so it's not a big amount of shares, but I believe I heard Ryan Terry, so they bought 500,000 shares. I know for me personally, I don't necessarily care. I don't know. I have to listen to the call again for the exact numbers. But essentially, they bought a bunch of shares. There's a lot left in their buyback purse, essentially. So if you think about this, $20, so a million shares would be $20 million. So 500,000 would be like $10 million. So it's something in that realm, and out of $1 billion, it's really a drop in the bucket, but it is something. And I'd say this is more of a symbolic thing that they're showing us as investors. Now, Karp, he does this whole talk here. They really touted the 70 to 136. This is the customer count from Q1 of last year to deal closure. So on the slide, they show the deals at least at least $1 million. But this is not it. At least $1 million. But here they're talking about the actual number of deals. Let me just get that slide up here. Yeah, because it's interesting. The one that they showed us on here is not as large, so people might think they're slowing down, because in comparison to Q4, it was like 100 something of at least $1 million. They're like, are they not signing as many deals? It's a slow time of the year, the Q1. So it's good that we got that clarification too. So they're getting a lot of deals signed that are under $1 million, and that makes sense from the boot camps. Now, going on there, still talking about government reaccelerating, growing company, all these things, and the European headwinds. Now, the QA itself, I'm going to say it was kind of mid to me. It wasn't, and I don't really use that that kind of language there. It's like basically it wasn't that great for me. We do get some tidbits, of course. First question from investors was strategy different from competitors. We didn't really get anything from this question. So it's what we already know. AIP boot camps, we know the product speaks for itself. That's essentially what they said. But Shyam does like to talk about the wins that they've gotten, the single day boot camp working on messy data. So compared to other people, or I guess other products, you can buy it, right? And you get the fancy bells and whistles during the presentation, but not necessarily the closing end there of actually working and bringing value. But they did like to bring up the 6 hours to 10 seconds for the Gaia targeting process. So working with a government customer for the Army. Now, Karp himself here, same old tidbit, doesn't believe there's a competitor actually against them that's as strong, at least, in the government and commercial space. And he talks about how they actually make AI work. And, that's been the thing they've been working on since, I'd say, ChatGPT came out late 2022. At least at the enterprise level, right? You can personally use ChatGPT, right? It's a pretty no-brainer. But when you're dealing with a lot of moving parts, cross functional departments, and then you're dealing with data, privacy, the laws around it, regulation, and just legal work, right? If you have a lawyers there, they're gonna let you know with certain data, you can do things, you can't do things, all that stuff. So it's just important to note that they're really focused on the enterprise side here. And Karp truly believes that they're the only solution that makes it work legitimately. And then he even also talked about on the US side why the strategy is working. So they're not finding themselves needing to convince the customers per se. It's more of like, we know you guys actually make them work. We just want to try it out, all that stuff, right? And they always talk about the technological moat too. This is a common theme just throughout all of Palantir's life. Like if you have to catch up, it's going to cost you billions and billions of dollars. We've talked about this with European competitors, or at least say the government signs with another one trying to replace Palantir. And it's like, well, you're going to spend a lot here to build your own stuff. Now, over time, we'll see if that continues. But either way, I think it runs in Palantir's favor. Then we get to Dan Ives' question as well. So he talks about this is what I was very interested in knowing about, and kind of disappointed with the answer. No answer, really. He just asked about the conversion for AIP boot camps to signing a deal, and just what that typical customer looks like, or I guess how they come into the boot camp and who's more willing to sign. But we don't really get an answer here. So they reference their stuff, right? 1 to 5 days to get a quarter of the work done. 1 to 5 days to get the amount of work done that would have taken a quarter. And then the number of deals that Alex Karp and the business update touted, 136 deals compared to 70. So that's still a very impressive number here, but not enough specifics. So I can give them a break at least because we're getting numbers at least, but I'm expecting over time that they're going to start disclosing more and more of this information, just so as, more runway for running AIP boot camps. There's going to be more data, of course. And if it actually is positive, that's more likely for them to share it, to be frank about it, because just like net dollar retention, I know it's not a required metric, and it was so prominent before, and then they just kind of hiding it. So if it's not performing well or it doesn't look sexy per se, they're probably not going to tout it. But we'll have to see. That's probably a future quarter kind of thing. Now, they want to know what's possible as well. So that's how Karp comes in here to answer the same question about Dan Ives' question. It really sounds like they were trying to assist each other to answer it, but not give out numbers. It could just be also they're not supposed to, I guess, give out too much information here right now since they're still figuring it out. And, Karp makes a very important point here to at least justify what they believe and why they're not necessarily sharing the conversion numbers. It's still the early days, right? And he said they figured out how to be great teachers and educators about AIP, implementing AI, all that stuff, right? But they didn't figure out the sales portion. You could teach someone, but it's still another skill set, or it's just maybe another part of the workflow they got to figure out on how to actually convince them then to get to the signing process. So, value definitely speaks very, very loudly. And dollars, of course, is a huge decision for any C-suite and any executive sponsor in that case. But there's still a lot of other costs associated with besides paying Palantir, right? How much of your workforce is actually not smart enough, but skilled enough or able to transition fast enough to do it? How does it work with your current tech stack? Things of that nature. And even politically at your organization, I've sponsored this project that hasn't been working. If I sign Palantir now, I'm basically saying I failed. So that is a real thing that can stop sales, even if value is facing you right there, or it's at least facing you enough that you can turn it away early and not have someone figure out that, you could have actually signed with Palantir and we would have saved millions, but sure, your project that you sponsored is good enough, right? So that's just something really important to note. And one of my disappointments with the Q&A call, just not getting enough information, but I'll give him a break for that for now. Then Mariana's question from Bank of America. I know she's a crowd favorite as well. So you talk about the unprecedented demand, but what is next in terms of tackling that demand and implementing the larger or implementing for the larger demand here? And this is a very important question as Palantir scales up. Are we going to see an increase in certain operational expenses? Are we going to have to figure out more things that they have to go through, right? Growing pains in general. We know AIP bootcamps are working, but once they start converting people, there's probably a whole other part of the pipeline that they have to figure out and, of course, scale and make sure actually works for their business. So Shyam then tries to answer. He talks about it from the product side. So we know he's very focused and very, very strong at that as the CTO. So he still talks about the same thing, basically. Enabling customers to be builders. We're educating them essentially. And this is both for the commercial and government side of things. So it's not like it's only for the US commercial that they've been focused on. But that was like the main thing that he was talking about. Then Ryan Taylor hops in. He does bring up Oracle's deal specifically. So that was really nice. How they can hyperscale with these kind of partnerships. And then, of course, showing use cases beyond just, oh, you have an AI chatbot. Now that's how you use AI, right? There's much more sophisticated ways you can do it. Automation on the back end, especially the example which I am always talking about, the guy at 6 hours to 10 seconds. That's definitely not a chatbot application, just so you know. So, but then Karp also hops in for Mariana's question, and he kind of brings on the same thing. They're just telling customers that they have the ideal product to bring them value for using AI. For US commercial, at least, it's letting them use the platform, learning about the products. And of course, the existing customers is easier for them to sign on. That's why he's saying they outperformed revenue-wise for the quarter. It's because they're able to, at least for the customers that are up to speed, they're able to expand essentially their usage of Palantir, build more use cases, and they're compounding. So it sounds nice because that's like, oh, what's coming down the pipeline? But there's still that main hurdle in the beginning there, and probably why they didn't give necessarily too much specifics here on how they're going to meet the demand, like, oh, are you going to hire more or what kind of people? But essentially, it is still a growing pain there with the number of people that they have for running these boot camps and to meet the demand. That's what it sounded like, at least to me. So that was really big. And then we get to the geopolitical questions here. I mean, it's okay to know from the mindset. Financially, it's not really a big deal to me, but, you know, honestly, it's the same thing. They're still mission focused. They're still Western aligned. Honestly, if they just keep focusing on working with the right customers that are Western aligned, because they've essentially cut off the other side with how outspoken they are, which is fine. But they really got to double down and make sure they can capture then the half of the world. I'll call it the half of the world that they're on, that side that they're on. And if the product is working and you're able to sell, even without a good sales force, per Alex Karp admitting it himself, and this has honestly been something they've always talked about throughout the year, so it's nothing new. But it's pretty strong when the product can sell itself, and if you can hypercharge it with, I guess, improving the product, of course, no brainer, but being able to do so without salespeople, I think is really big. So, and I think it was nice that he said we're the best investors, the individual ones for Palantir. So let me know in the chat if you caught that, because I was like, oh, he basically shouted us out. So it's always nice to get that admiration for a little bit. But that was Q1 earnings 2024. I'm going to look at these much more deeper here. I did, if you want to look back at the stream for all the different numbers when it came out, I also gave some background information per se before these were released. But just to do a good summary here, at least the biggest highlights was U.S. commercial looks to be a driver still. We're signing on customers. The actual revenue, 21%. Oh, sorry, not 21%. 20%, I believe, is what I saw. Oh, or am I talking about the guidance? I'm jumbling my mind here. But essentially, oh, sorry. It should be down here. Yeah, 21%. This is what was the actual revenue growth. So Q1 versus Q1 of last year. But the other one thing that I really liked too was for guidance. Q2 2024, at least on the top end versus the top end of Q2 of 2023, we're looking at almost 22.5% growth. So this is the turnaround number-wise. So I was probably going to be okay if their customer count grew fast and then revenue necessarily still had to catch up, because at least we know what's coming down the pipeline. But in this case, they actually got the revenue growth and beat out their own guidance by a lot, honestly, from Q1 2024 here. And then it looks like with the raising of 2024's guidance too, they expect to do better throughout the year. So these numbers will be nice. I'm going to make a consolidated video because I like to make them as quick as possible. But thank you all for watching and joining me on the call and listening to my thoughts on it. I kind of like to rapid fire through it, feel free to subscribe. I know a lot of you are new, and these are the big events where I'll live stream once in a blue moon, basically once a quarter. So, but I appreciate everyone for joining here. A ton of you guys. At one point, I saw like 260 people. That's like more than double of what I've seen at the highest I've seen for a live stream. So I really appreciate the support here. But yeah, feel free to comment on the live stream afterwards, and I'll see you guys in the next video, and it'll probably come out, depending on, dinner time and all that stuff. I could probably get it out late tonight, but early tomorrow morning might be the best too, just so you guys all can review it yourself. And, I'm going to be a stickler for this. It's best to always look through the numbers yourselves and see it for your investment, what is important to you and your allocation, especially for a company like Palantir. If we look at the stock right now, we're down about 7 something, almost 8%. Well, $23 for those who've been here for a while is like still amazing if you look at it from a longer term perspective, of course. But with the price action today, essentially we gave up all those gains. So if you're even looking at the chart here for today, it's like, oh, well, everything, if you bought in the middle of today for some reason, then you're down. Or if you've been sitting, if this price action continues into tomorrow, then it'll be like nothing happened essentially. So, but it'll be interesting to see what the price action is. It doesn't necessarily indicate it's going to happen this way. And maybe as more news is digested overnight and it's the morning, we'll see how it goes. But I appreciate everyone for stopping by, and just let me know down in the comments if you like this or not, or what your thoughts are on the Q1 2024 earnings. I think it's a strong start to the year, and I'm looking forward to even more growth later on. Customer counts for sure, and revenue, and they've raised my expectations, honestly. So I'm looking forward to the growth and looking out for more PRs and deals, hopefully, that can give us more clues.